Hey there, agent partners. Teresa Timms, president of TDR Mortgage, and you can find me on the web, SoCalLoanPro.com. The opportunity for first-time buyers is pretty fantastic right now. You can purchase up to a 448, no, what does this say? 446, 891 sales price. So let's say 446 in the Inland Empire areas of San Bernardino and Riverside County, and you can get in with only $3,000. If I were you, I would be calling every single person in my database, let them know about this great opportunity. Do they have any kids, any friends, or any family? Get in front of your clients in the next 2 weeks and see if you can't drum up 1 or 2 more purchase money transactions this year. How's that sound? And I'd like to help you achieve that. You know, you don't even need perfect credit to do these buyer programs. In a lot of cases, we start out with people in the low 6s and are able to get them up in a very short period of time with little credit tricks that we have up our sleeves over here at TDR Mortgage. So let us partner with you to make more money this year and close it out with a big, giant, huge bang. Okay, so a couple of things. CalHFA just had a change in credit score requirement for the conventional product. It's going to be 680. For the FHA product, it is 660. Take a look at what we have here. Okay, so like I said, 446 max sales price, San Bernardino, Riverside County. You can go up to a 501 sales price. That'd be a really great commission for those purchasing in LA and Orange County. All right, okay, so you know, the CalHFA buyer programs, you are going to have a first, a second, and a third. That's how they work. If you look right here, you're going to have a silent second and a silent third. It's going to total about $28,000 that after they get in with their $3,000, they're going to have payments, not payments, they're going to owe this $28,000. The second accrues at 3% simple interest. The third is what's called a ZIP, zero interest program, no interest. So it's a really cool deal for people that, you know, do not have $28,000. Yeah, $28,000 to get into a house. Now, this total funds to close, it's a little deceptive if you just look at the 3,100. You have to look at these asterisks and go down here. This it should have a little note here, but this includes the seller paying a $5,000. So to get in with a $3,000, we need $5,000. I also forgot to update the APR. So this marketing piece is for realtor partners only, is not to be shared with your customers because we've got to update this. Now, if you'd like to, I can send you your very own customized marketing piece that you could send out to your database to get in front of your database and let them know about this program. I'd be happy to do that for you. Rate is 4.5. I am not kidding you. A week and a half, 2 weeks ago, this program was at 3.625. So CalHFA has traditionally been higher than regular FHA, and then all of a sudden they lowered their rates crazy, crazy low. But I've noticed the last week they've really been raising them back up. So let's compare and contrast, shall we? Okay, so regular FHA, right? 3.5% down, no lender credit. You need $28,000. The rate is 3.3. 3.3. Wow. That is really sexy. Okay. Payment, PITI, principal, interest, taxes, and insurance. The taxes are calculated 1.25%. And I think what is the fire insurance is at 0.25. So $2,800 versus CalHFA payments. The payment is going to be $200 higher a month, but $28,000 versus $3,000. So you can obviously see the benefit there. This is one that we do a lot of. If people have access to a little bit of cash, in this instance, if the buyer can come in with about $17,000, $18,000, we can do a lender credit to cover most of the closing costs and get them in. Now, in order to do that, we have to raise the rate to this 4.5% mark, which that kind of sucks. Sometimes, like, there's a sweet spot. This is giving 2 1/8 or almost 2 1/8 of closing cost credit. I bet you if we were giving like 1.8 closing cost credit, this might be like 4.25. So a lot of times we're, giving these options to the buyer. Hey, if we give you this much, this is how much money you need. And oftentimes, if they're able to come in with a little bit of extra money, they do to have that lower rate. Clients that are doing these two right here qualify for streamline loans. So when the rates dip into the twos, and I don't have a crystal ball, but the rates keep going down. And so there's a thought. I've been saying this, I probably sound like a broken record. Bruce Norris, he commented, or he's been saying that the rates are going to go into unforeseen territory in the future. So all of the loans that I'm doing, I'm trying to put people in a position to take advantage of the rates going lower in the future. And so if I were recommending to somebody and they had $15,000, I would really, really be trying to put them down here in this FHA product, and then we would streamline them. Streamlines are going at like 3.3 to 3.5. So even in 6 months, if rates didn't go down but remain the same, we would be able to streamline this buyer right here into a streamline loan. So I hope you learned something today and are able to share this information with your clients. You know, when you're able to talk intelligently about finance to your clients, you're able to convert more buyers into closed transactions. I'd love to help partner with you and be part of that. Give me a call at 909-920-3500 or just email me back and we can get you your own flyer with your own information. Anyway, y'all have a great day. Look forward to hearing from you soon. Stop this.